Raamdeo Agrawal, A. Bala, and in seconds from now, Sunil Singhania, they also would be joining us. The three wise men, like I always call them, they are there live on this budget day on your favorite channel, ET Now. Raamdeo ji, good morning. Let me start with you first. In the overall scheme of things, for an investor like you, budget will not change anything. But given that last year budget changed the dynamics of the thought process of government's thinking, what are you likely to see? I'm asking you this question because last budget re-rated the market.
Yeah, I think in last 12 months, two, three things have, particularly in the corporate profitability side, it has been a huge surprise. The pace at which corporate earnings recovered post second round of pandemic, that is quite stunning. And that momentum is on. And hopefully, with the credit expansion and credit cost contraction, I think financial sector should be leading the pack. And second, that is the largest sector. Second largest is IT. And IT in any case is booming. So you have a lot of fireworks out there. And particularly if expected GDP growth is about 8.5%, it doesn't matter from which sector it comes. But in aggregate, if we get about 8.5% kind of thing, I think corporate profits will just boom. And that is where my focus is. Which way the aggregate corporate profits are going. The sectors post-budget, we can figure out where the tailwind becomes stronger or the new tailwind starts. But just getting that 8.5%, what are the assumptions? Because a lot of assumptions may go haywire, like say assumption on oil price, assumption on your own inflation. So those things which is not in their control. But I think broadly, if we are able to achieve even with a little higher inflation of 6%, 8% kind of thing, 14% nominal GDP growth rate, I think there's a lot for the good corporates.
Sunil, good morning to you. Thank you for joining us. Always look forward to your thoughts on the budget day, especially. Sunil, you spoke about financials when they were underperforming. This year they are outperforming. On the budget day, all financial stocks are moving higher. Are markets expecting something big for the financial sector? Are markets expecting something big for the economy, which in a sense will create a multiplier effect? Because today financials and off-late financials have outperformed.
Hi, good morning, Nikunj. Thanks for having me. So a few things. First of all, I think we had a phenomenal earnings season as far as the banks and a lot of other financials are concerned. And because generally there was weakness in the market and, because of huge FI selling, particularly in the IT and the financial services space, the reaction to this fantastic results has come in a bit late, I think. And I think that is the reason, major reason what you're seeing now. The second thing, as you rightly said, if the economy grows at, 8.5% real, maybe 10, 11% nominal, and also the commentary coming in from a lot of banks that credit growth is starting to pick up. I think it's logical to expect that credit growth can be in low double digits as we move forward, which would be almost a 4-5 year high. And with no major build-up of NPAs, I think we are heading into a phase where we'll have strong economic growth, strong credit growth, great operating profit growth, and because of lower provisioning, a great sort of a PAT kind of a thing. So I think it's more fundamental. Coming to budget related, maybe, there are rumors that the limit of PSU banks for foreigners might be raised from 20% to slightly higher, which might impact their weightage as far as MSCI is concerned, particularly the large public sector bank. So maybe that might also be the reason why at least some of the PSUs are strong. But I would say that it's predominantly been more fundamental driven rather than news flow driven.
Do you think unproductive doleouts like, urban, Manrega, higher rural spending are not going to go down well with the market? Or do you think the market would be okay with that kind of a spending texture? Bala?
Yeah. The way I see, I think the social spending, I don't think is going to stop given the fact that the money that has been kept aside for the purpose of lifting the rural population to a higher per capita income level clearly now is being done through the banking system transfers. I think unlike the past where the money never used to reach the real beneficiary. And Government of India has seen the real benefit of this. One, the money is going to the right set of people, and therefore the rural economy continues to do really well. And given the fact it's also supported by reasonably good crop this year, agriculture crop this year on the back of good monsoon has been pretty good. Therefore, the combination of these two, I think, is going to help the economy actually to grow to the next level of growth. And second, I think the rural construction activities also there has been a pickup that we are seeing, and given the fact that last 2 years pandemic time, a lot of labor unrest also happened. Not unrest, I think labor did not, of course, have enough income coming in. Therefore, the benefit that the government of India has given and further actually given a support to the rural economy. And definitely, I think it will have a positive impact even on the construction sector. Therefore, they lift the whole economic growth. So I don't think social spending is going to be seen as something is going to be reduced. And given the fact the benefit has been seen, I think what could potentially come actually allocation towards rather encouraging more investments that happens in the private sector capex, and therefore that lead to actually credit pickup happening. And also there's some bit of focus coming on the infrastructure sectors, including real estate. The entire allied sectors related to the real estate sectors could also benefit. And therefore, actually the combination of spending on one side, and then the combination of growth coming back in the form of private sector investment going up, could potentially be one of the target area in the budget. That's what I would assume.
Yeah, absolutely. Sunil, LTCG पे तो कुछ नहीं आ रहा. That's a bigger worry, I guess, LTCG,
I think,
taxes on the super rich, HNIs, FPIs. I don't want to like black tongue it, but yeah, your thoughts.
Tax rates on super HNI has already been increased, and I think they are pretty high. As far as LTCG is concerned, I think the finance minister 4-5 days back already clarified that there is no such proposal. But let's see. I think the government also needs a vibrant, equity market for disinvestment, for even the growth as far as economy is concerned. I think the startup culture is building up very well, which is also great because it provides employment. It also brings in a lot of, long-term capital. I don't think that at this point of time, it would be logical to tinker with any of these.
Just to add to what Sunil mentioned, I think the first year in the year 2021, the entire companies, the balance sheet has got completely improved, and entire resource financing has happened through the equity fund route. And which is I think biggest achievement that India has got in terms of corporate balance sheet improving. And thanks to the good equity market and thanks to the higher level of participation that comes in equity. Therefore, money available through the equity route has gone up quite significantly, which I think cannot be ignored. And by doing anything of taxation, I think it's not going to do anything good for the economy in terms of tax collection going up. And if at all it has an impact, it could only have a negative impact. Therefore, I would assume anything related to the long-term capital gain tax, as government has been saying, would be the least possibility coming in terms of any change, I'm saying.
Let's go to a budget heat map, stocks where we feel that there could be some budget action and policy reaction. Real estate stocks, clean hydrogen companies, EV companies, obviously hospitality, hotel, these stocks would be in demand in terms of where the market positioning would be. You're trying to address the trader here. That's one important heat map which in a sense would tell us which way the market mood is moving. And there you go, you got Indian hotels, something could come for real estate, for the hospitality industry. Let's look at DLF. See, these are some of the stocks where you may actually see some action coming in. Real estate could be a force multiplier sector, so to speak. I want to also look at some possible government disinvestment names. Shipping Corporation, BML, what is happening to Container Corporation, IDBI Bank. Remember, these are not new names. These are names where the intention to privatize and intention to sale has already happened. Now, we can endlessly get into this argument and say, "Arey, this all nothing happened." Yes, nothing happened. But Air India happened. And more than disinvestment, strategic privatization, if it happens, it just changes the dynamics of the sector. Raamdeo ji, let's look at a scenario which is more like a realistic scenario, that this is a no-harm budget. Nothing detrimental, incremental positive, nothing big bang, but the direction remains very clear. Do you think markets post this event risk is behind us could stabilize?
Risk to the market is the global. I mean, what happens in US, what happens to the global inflation, commodity prices, and the behavior of the FIs. So it is not the trouble. I don't see, worthwhile trouble here because fiscal space is so big. We have used the monetary space. Fiscal is now going to be used because you'll have a bumper tax collection. You have 6.5% fiscal deficit, unprecedented amount of money in the hands of finance minister. So I don't think there'll be penny pinching on any sector. Now, who gets the big one? That we have to see in the course of the day. But the risk to the market is maybe 2 years rally, which has happened. So there is a lot of profit booking. Second is I think FI, which owns almost quarter of the market. What is their behavior? They are dependent not so much individually on India. Of course, at some point of time, corporate profit growth will turn their mind also. But if there is a global sell-off, I don't think we'll be spared. So that's the only risk I see. Otherwise, we are going to have good profit growth.
For the benefit of our viewers, what is the volatility? The average swing on the budget day, we've looked at last 10 years data, is about 3% plus. So we could be in for that average swing. However, the Morgan Stanley report, I'm going to give credit to them, is indicating that over the years, volatility seems to be coming down. Sunil, I'll throw 2 data points at you. We'll capture them for benefit of our viewers. When budget 2021 was presented, Sunil, crude was at 55, now at 90. US bond yield was at 1.1, now at 1.8. So the settings are different. Can you break that for us? What it means for the market, what it means for the budget making, and what it means for sectors?
So I think the data point you have given are obviously data, so they are right, Nikunj. But I would say that 21 would not be the right indicator to compare. It was at the peak of the COVID times, and a lot of I would say upheaval happened in a lot of sectors and a lot of asset classes. So you had this huge pump up of liquidity, which brought the yields down to an all-time low of 1.1, 1.2 as far as US is concerned. We are seeing some normalization now, and yields are back to around 1.75. And with interest rates slated to rise, and which is a known fact, so 4 rate increases are already almost discounted by the markets. It can be argued that we might inch up to maybe even 2% as far as the 10-year G-Sec yield is concerned in the US. And I think Indian yields will follow. They have already been following. Otherwise, there will be a lot of problem with our currency. As far as crude is concerned, obviously, that is not a great thing to happen for India. We enjoyed almost 2 years of very low crude prices. It helped the Indian government, I would say, manage its balance sheet pretty well. Because the collection from lower crude prices, the biggest beneficiary was the government of India. It was, as not everything was passed on. And to that extent, I think this higher crude prices comes as a little bit of negative news as far as India is concerned. The only positive is that we don't get impacted on the fiscal side because it is now a pass-through. But yes, from a current account balance perspective, from a currency perspective, trade balance perspective, it does have an impact. Our view would be that any sharp increase beyond 100 would start to, bite into our growth rates, as has happened in the past, maybe a couple of decades. But as long as it stays in these levels, we have sort of managed it. Nikunj, I would still believe that medium to long term view on crude would be a little softer. I think what we have seen right now is obviously demand coming back and supply not keeping pace, along with the fact that a lot of these oil producing nations have curtailed production to stabilize prices. But having said that, yes, crude is something which we as a large importer have to keep an eye on. As far as budget is concerned, both these 2 factors, I don't think will have too much of a bearing on the budget for this year, as it has already been factored in. But as I said, crude moving meaningfully up from here should definitely be a factor to watch out for.
Okay, 7 minutes, 13 seconds left to go. The countdown is kick-started to Budget 2022. By the way, I just want to quickly take stock of what the markets are up to, because we're actually roaring and raring to go. It's a near about 200-point move that you've seen in the Nifty futures right now. We're currently sitting at 17,557. If we can just bring up the, intraday graph of the Nifty for you. The breadth as well has been in ship shape. So you've got a good 155 stocks which are standing to the greens right now. And this is within the listed F&O segment that I'm talking about purely. 44 stocks only standing to the declines. And I say only because, in the past, or rather 4 trading sessions back, it was a very different picture that the market had. Fortunately, in the last 4 trading sessions, we've made quite a decent comeback. Technology, oil and gas seem to be the only laggards today, and media to some degree. A large part of the market is actually holding out very strongly. So what's taking the lead? Pharmaceuticals, metals and banks. And I want to start off with the Nifty Bank because that's almost seeing a move of nearly 800 points. That's how strong the Nifty Bank is going into the budget right now. There you go, 644 points up in the green right now. Everything from an IndusInd Bank, ICICI Bank holding up nearly 2.5%, Axis Bank, SBI, Kotak Bank, HDFC Bank. They're all a very, very strong ship right now as we speak. Sun Pharma has surged very, very smartly. It's a 4.5% uptick on Sun Pharma. This is indeed the largest large cap mover. Britannia is up about almost 4%. And then, of course, you've got the likes of a Hindalco, HDFC Life, HDFC, UPL, L&T, etc. as well, which are looking good. And technology too has made a bit of a comeback. Oberoi Realty is extremely strong. Tata Power is strong, 3.5%. But remember, these stocks have fallen also quite a fair bit. Not Sun Pharma, but the likes of a Tata Power, Tata Steel in the meltdown that the market had a few odd days back. Bala, just to come to you, the points that Sunil was making, what's worked in our favor is that in the last 2 years, inflation was under control. I mean, crude has been, in that sense, a very recent problem that we've had to deal with. And yeah, inflation definitely has spiked, but that again has really bopped up its nasty head only in the last 2 odd quarters or so. Do you think the one eyesore continues to be that the government could not make use of a roaring bull market and inflation which was under control, crude which was under control for the last 2 odd years? We've not seen anything literally on disinvestment or privatization. They haven't been able to walk the talk in that sense, besides perhaps, Air India.
I think clearly, I think what you said, while it's true, I think we are able to see it, how they have been progressing in terms of divestment, which has been the topic of discussion for almost 2 years. I think the question is, what price you get for some of the things that have been identified. And also that's something which I think give you a larger chunk of flows while doing the divestment so that the fiscal deficit can be taken care. I think the way I see is the government seems to be focusing on some big bang divestment targets such as LICs. I think looks like the entire energy of the government has gone behind putting the LIC IP on track. Therefore, in one go, you're able to rise close to about 1 lakh crore just by of divesting anywhere between 8 to 10%. So that's, I think the government seems to be focusing on a big ticket items rather than small things. But having said that, now the fag end of the year, realizing the fact that the various, despite having various challenges with respect to the Air India divestment, the very fact that this finally has happened, and subsequent to that, there's some more divestment has happened with respect to the steel sectors, government-owned companies. I would assume it's one the beginning of the divestment cycle to pick up. Second is the very fact that it's not happened in the last 2 years. It's also now making the government to think a little out of the box. One, increase in the limit that's necessary for FIIs holding in Indian PSUs. I think that's, is a good thing that is coming in. Sometimes the not happening certain things as planned would also give you a sense of what are the things that need to be done in order to make the divestment happens in real sense. Which I think the government seems to now getting some ways and means of doing different things differently in order to ensure that the increase in allocation towards the capital, the capital adequacy now it now reduced. Therefore, they don't need to capitalize any of the banks. Bank consolidation happened. The increase in limits in the banking sector could potentially make more money coming in into the companies. Therefore, unlocking value can happen. I think the oil prices settle down. Maybe the BPCL and HPCL, the divestment could also happen as the price settles down. But that's something I see is while there has been a delay, but definitely I think it's still blessing in disguise for this to actually start accruing in managing the fiscal in the next year, 2020-23. So therefore, that's the way I look at it. And probably they made a good beginning in the last few months, I would say.